Goldmoney.com, Alistair McLeod. Very interesting article, and I think he's pointing the finger in the right direction. This vote coming up this week, which I just did a video on previous to this, about how it doesn't even really matter if the people vote to leave the EU in the UK. If the UK people decide to leave the Eurozone, it didn't even matter because it's not even binding. So they would just say, okay, politicians, we would want to leave, so please let us leave now. And the politicians would stand there and say, well, we make the final decision, and actually we want to stay. And I said in that video, basically, if you hear that they're definitely leaving, it's because the club has decided it's time to leave. And there's a reason, a motive behind it, and it's not because simply the people voted and this is what they wanted. No. So he has basically he's saying it's not the Brexit, it's the banks, stupid. And he makes a good case. Brexit is not the most important problem facing markets. It is mounting problems in the European banks. Matter of fact, give me 1 second. Let me see if that comes up. Yes, it does. Okay. But before I look at the systemic issue, I will summarize the Brexit position from the trenches in the last few days before the referendum. In the run-up to Britain's referendum on June 23rd, the Treasury was tasked with modeling the economy post-Brexit. The result was George Osborne claimed that a Brexit vote could cost every household 4,300 euros. This is the underlying reason that markets, allegedly, are frightened of a Brexit. One suspects that if the Treasury models had suggested there is little cost to leaving, the result would have not been published, and George Osborne would have contrived a different argument. Anyway, we all now know that econometric models suffer from garbage in, garbage out, but the Treasury is meant to be authoritative and trusted. However, a new paper by Professor David Blake of the Cass Business School points out the extraordinary abuse of economic models in the EU referendum debate, and he is moved to term the two Treasury reports that gave the Chancellor his facts as dodgy dossiers. Any good Austrian economist can tell you why economic models do not work. Without going into it here, models should simply be disregarded. Professor Blake's paper exposes the techniques as well as the statistical assumptions employed by the British government when using econometric modeling to frighten voters into voting to remain. Separately, a new book co-authored by Dr. Radomir Tylekot and Sir Bill Cash charts the history of the EU project from America's post-war strategy, implemented through the American Committee on United Europe in 1948, with strategic assumptions that persist to the present day. The paper and the book, taken together, expose the truths withheld or obscured by the British government at the time of the first referendum, in the use of a similar approach today. This time, the vested interests and scare tactics used by the government appear to have begun to smell the electorate, that's cute, like a long-dead rat. Instead, ordinary voters are more worried about the high levels of immigration and the strains placed on health and education services, the housing shortage, and the suppression of wages. George Osborne has admitted that the Treasury is working with the Bank of England on Brexit contingency plans, but no plans have emerged so far to save the necks of cabinet ministers in the event of a Remain vote. A win for Remain will be only the start of their problems, unless, as seems most unlikely, Remain wins by a clear margin. In the event of a narrow win for the establishment, which is the outcome pollsters currently expect, claims that it would be better to be inside the EU, where Britain can influence policy, will almost certainly be proved to be an illusion. The UK's referendum will have threatened the future of the EU project. and it would be entirely natural for a very relieved Brussels to regard the British government as having lost its credibility and to treat it with disdain. Britain is easily outvoted in the Council of Ministers, having only 13% of the votes, and the Franco-German duopoly will surely ensure Britain is sidelined in all policy issues. The idea that Britain is protected by opt-outs will be exposed as wholly inconsistent with EU treaties and therefore the facts. Democracy is not only ignored by the EU's unelected commissioners, it is written out of the EU's constitution. There should be no doubt about Brussels' view of democracy and referenda. Jean-Claude Juncker, president of the European Commission, is reported to have said, quote, "There can be no democratic choice against the EU treaties." And Celia Malmstrom, the EU Commissioner for Trade, said, quote, "I don't like my mandate from the European people," end quote. Therefore, a British government minister rooting for Remain today will be in an untenable position in the event that Remain actually wins, unless it is the overwhelming public choice, a public which feels cheated by the politician or political establishment will turn against it, as will the members of the parliamentary party that campaigned for Brexit. The Conservatives would be bound to face a severe internal crisis. It appears likely that so long as the polls indicate a close result, we can expect the self-interests of the political class to wane in its support for Remain and to drift towards Brexit, because both the party and power are more important to many of the Remainers than the European issue. This development is not currently discounted by the media, and jumping ship is always risky in politics. But if this analysis is correct, it may further boost the Brexit cause. Already the opinion polls are moving Brexit into the lead, and if this momentum continues in the short time left, Brexit could actually win the day. But as they say, a week is a long time in politics, and we have 1 week to go before the referendum. Surprisingly, perhaps, Brexit would therefore be the least contentious and therefore the best outcome for the Conservative Party for the reasons mentioned above. This would end an argument which has split the party since Macmillan was Prime Minister, and when Conservative voters were first persuaded the common market was a free market. If the referendum result is for Brexit, politicians in favor of Remain will simply submit to the wishes of the electorate, adapt to the new reality, and wait for the controversy to blow over. Or, what I said earlier, your vote doesn't matter anyways. As I noted in my last video, it's not binding. Therefore, all you're saying is, as a population over there, is we've voted to leave. The results are in. We want to leave. Now we need to ask our politicians to vote for this and go ahead and invoke Article 50, as they call it, to leave the EU. Which then will say, well, we don't want to leave because, again, we're paid campaign contributions or payoffs in the current system. And if we leave that current system, we're not going to have that. So, no, we're going to stay. Unless, as I said previously, it's time that the club wants this to take place. And it'll be Britain first, UK, then another country, then probably, Greece is going to come along. Hey, we tried this before. Now we're ready because the UK just took the big step. Now we're ready. We're going to leave. Then another country may come along. And the next thing you know, the EU starts breaking apart. Lindsey Williams, a few years ago, said the euro would be going away. It would start to crash. It would be the first sign that within a few weeks after the euro goes down, it'll come to America, which means it is in the plan. It is in the works. It is a plan, which means the EU can't just stay there all friendly and 28 members. We're good to go if that's supposed to happen. So he says it's all about the banks. Political instability for the EU is a significant invisible threat, but it is not the immediate problem, which is financial. As a result of savings and spending imbalances, none of the core Eurozone states can stand on their own. Substantially, Germany's private sector savings are loaned to the governments of and businesses in France, Italy, Spain, Portugal, and Greece. None of these governments are able to repay German savers, nor are they able to roll over increasing debts indefinitely. Furthermore, bad debts are piling up in the private sectors, with Italy now a basket case, where non-performing private sector bank loans officially amount to nearly 20% of GDP? Holy crap. And all I think of when I hear that, Italy, banks, bad problems. Hey, Webbot said a while back to look out for Italy and a failed bank in Italy that really takes the world takes notice of, and it's not good. That will be coming, according to the Webbot report. Caught in the middle of these imbalances are the private sector banks. Because of the scale of these problems, it is no longer a patch and mend issue, but a serious systemic problem. The European banking system has been struggling for survival ever since the Lehman crisis, reflected in the dismal performance of share prices of nearly all the major banks. The chart below illustrates how these problems are reflected in just 3 leading banks' share prices over the last 12 months, which I'm going to show you right now. Up here is 100, and down here is below 50 now, looking closer to 35, and up here maybe 40 from 100. If that gives you any clue as to what's going on with the banking systems across the world, but in this particular case, European banks. It's no different than our American banks. They're in just as much trouble. They've all been cooking their financial books the same way. It will end the same way. Since this time last year, UniCredit, Credit Suisse, and Deutsche Bank have seen their share prices more than halve. Worryingly, the crisis lows of last February, when the Italian banking system's current difficulties began to surface in the financial press, are being breached. Analysts at Morgan Stanley are also worried. According to a recent article published by Reuters, they believe that UniCredit and Deutsche Bank may struggle to pay coupons on their additional Tier 1 capital or contingent capital bonds. Morgan Stanley added that these capital bonds, known as COCOs, added that COCOs issued by Crédit Agricole, BNP Paribas, and Credit Suisse could also be at risk. Of course they are. The other evidence of banking woes is the flight of investment capital into government bonds from cash and deposits held within the banking system, so much so that Germany's 10-year Bund now carries a negative redemption yield. The flight into tangible bonds is so pronounced that 400 billion euros of investment-grade corporate bonds are also on negative redemption yields. Market commentators are blaming this on the fear of the Brexit vote, but one look at the financial condition of the European banks tells us a completely different story. The banks must be struggling with deposit contraction on their balance sheets, fueled by a combination of negative interest rates and systemic fears, at a time when their loan books are burdened with bad and irrecoverable debts, and I will add, they've been cooking their books, so you can add that to it. It looks like the modern equivalent of an old-fashioned run on the banking system, led by the pension and insurance companies, which are becoming increasingly concerned about leaving balances with the banks. Even though the ECB's Mario Draghi has committed to do whatever it takes, the Eurozone has become a dangerous place for savings and investment. And retirement, like pensions. You can add that one too. Whatever the outcome of the Brexit referendum next week, it would appear that nothing can stop a systemic crisis developing in Europe. The two issues are unrelated, though Brexit could be blamed as a trigger. Brexit will come and go, but a European banking failure will remain with us, whatever happens on June 23rd. So that's just another reason for me to see that the club does in fact want the leave votes to take place, and then have the government follow through and say, well, we'll go ahead and do the will of the people. We're going to leave the EU. And then all hell can break loose in the financial side of things in the EU, the economy, the markets, or whatever, the euro itself. And they can blame the UK, you did this. The UK left, they shouldn't have left, but the people voted. It's their fault. It's the people's fault. You people of UK, you caused this problem. and the finger will be pointed in that direction. And then when another country says, "Well, we're going to leave too," well, they did, so we want to. We've always wanted to, actually, but we're too scared to take the jump off the high dive. So now that UK is left, we're next. Oh, and us too over here. Oh, and me too over here. And then you want to talk about really pointing the finger at why the euro has failed, the European stock market's crashing, which would also affect our markets here. And then they would just blame it all on that whole situation. Now, one might conclude, as an alternative view, this just popped in my head as I was talking, if the club wants one more hurrah, one last hurrah for the USA markets, you cause the problem in the EU to take place. They blame it on the Brexit vote and all that crap. And all of a sudden the markets start tanking over there. The euro's not looking good. And then all of a sudden everyone's scared. Oh, we're scared. What do we do with our money? USA is not affected by a Brexit vote. Let's put our money over there. And then all of a sudden our markets start to puff back up again until it's our turn. Then our markets crash. Or that's not going to happen. And when their markets goes down, our markets go down with them. And we both are on two sinking ships, so to speak. These are just possibilities. I have no idea which way this is going to go, and neither do you. Unless you are a member of the club, you hang out at the Bilderberg meetings and know what they talk about there. And even those people, I don't think know exactly what's going to happen with these markets. You know, heads of Google and tech companies, they're not going to be sitting there listening to them talk about, you know, the world market's crashing. That's probably above those people's heads. There's some higher ups that do know, again, the real top families, but all we can do is wait and see for what they have planned. Maybe if the Economist magazine put out an early cover of their magazine that we can kind of get a good peek at, maybe we'd have some insight. But until then, you're stuck with my opinions. Take care.